get started. Hopefully everybody in here has taken a Foundations 1 class or has the basic foundations. I feel like I see a few new um, faces in here. Yes, I did. So we'll get started here with Foundations 2, right? For those of you who don't know me, because I do see some new faces, my name is Natalie. Super, super glad that you're here. I always try to give a little background on myself for those who are new. I started trading options originally and learned from like a really, really incredible mentor. And from there, I ended up kind of going off into futures, which is where I ultimately found, I feel like, my place in the trading world. We do still trade options, more swing and leaps than anything, but a lot of my focus has been on futures simply because I felt like I was able to find a lot more stability in it, and kind of create like a trading ecosystem for myself, if you may. And I feel like in futures, I just really learned market structure, price action, all those kind of things a little bit better. I always talk about this. We're always going to go through, the technical side of it, but I will never pretend like the psychology and the mental side of trading is not equally, if not more important than the technical side, right? I say this all the time. It'll probably take you 3 to 4 months, right? Up to you, but it'll probably take you 3 to 4 months to get down the technical side of trading. Depending on how much time you really dedicate to it. The rest of the time is going to be spent mastering yourself. I mean, put simply, it's going to be spent mastering yourself, figuring out, why do I keep blowing accounts, or why do I make this decision? Why does this happen? Why does this like make me spiral? Do I not like being wrong? Is that my problem? Right. And so the mental side of it is just as important as these foundations, as learning these technical things. And so I do really encourage you to do that. And you're going to do a lot of that through journaling, which is, part of what we talk about in Foundations 1 is you have to journal, right? And it doesn't necessarily have to be writing out every single trade and your entry, all of that, right? You may not want to get that deep into it. But as you learn and as you grow in trading, journaling is going to be really helpful because it's going to start helping you identify patterns, behavioral patterns. And so you'll be able to look back on those things and figure out, okay, why did that happen? Right. And you'll start noticing it in yourself. Like I now can notice in myself when I'm about to like go on tilt. Or now before I even sit down to start my day, there's some mornings I wake up and when you wake up kind of late, later than you wanted to, and then you're rushing to do something and then you're rushing to the next thing. If I find myself carrying that same energy into trading that morning, then I know I need to actually pause for a second. I need to give myself a second to like catch up and breathe before I take a trade because I don't want that to carry on over. Right. So those are things that I learned about myself through analyzing my behaviors, and being able to go back and track what happened on those days where I maybe didn't do as well. So I encourage all of you to do that. I don't care if it's a paper journal on your notepad, TradeZella, website like that, but definitely do that. Because trading it's going to force you to grow. It's going to stretch you in ways that you probably didn't anticipate and maybe did or did not want. But it is going to force it. Okay. But the beauty of it and the really cool thing is that you're learning a skill set that nobody can ever take away from you. Once you learn this, right, this is something that you can literally pass on from generation to generation. That's why I named the group Legacy Traders, because it's about building a legacy, right? It's about learning this and being able to impact your family and the generations that come behind you, right? Whether that's your kids or grandkids, nephews, nieces, whatever, your friends or neighbors. And so we're creating legacies, right? When you think about it and you really learn it, even if it takes you the next 2 or 3 years, I don't claim that for anyone here, okay? But even if it takes you a few years, it's totally worth it. That's why you see people who are 6, 7 years in, they finally became profitable and they're so grateful, but they stuck with it, right? Because it's totally worth it. You're able to literally print money when you come into this. And so I'm just forever grateful for the skill set. And that's why I teach it for free. It's a ministry for me. And I don't take that lightly. I don't think God gives us skills just to keep them to ourselves. I believe that he wants them to pass them on to other people. And so this is just a part of how I reach people, and a part of like my giving back. And so These classes are being recorded. So today's going to be recorded. It'll be posted on YouTube so that you guys can rewatch these. We will still have, what I decided to do is I'm going to do a monthly, maybe sometimes twice a month, but definitely monthly seminar where we'll do kind of just an intensive and go through all of the foundations from beginning to end and be able to cover all of those different things in that. So there will still be that. We'll still be doing our study halls. You know, like tomorrow, there is a study hall for anyone who wants to go into that. Absolutely. I'm so happy to and blessed to. It is intense, Sequoia. It is going to be intense. It's going to be a seminar, but right, that's where the supplemental study halls come in, right? So you go, you learn, you rewatch the foundations classes after that because those will be available. And then you show up to study halls and you learn, right? And so I did want to do that because I wanted to create space to just work on other projects, and I'm really excited about some of that. So before I get done today, don't forget, somebody remind me to add the Discord in the chat for anybody who's interested in joining the Discord. It is totally free. And so the classes, these YouTube classes, that's all going to be free. The seminar will be free. I did open up for mentorships, which I haven't done in a while, but I am going to be taking one-on-one mentorships. I think right now, March, April, May, and June, March, April, and May are spoken for. So the rest of the year, I'm only going to be taking one client a month. So if that's something that interests you, send me a message in the Discord. And my last little shameless plug, I'm launching a podcast that I'm so excited about. So if you're not already following the TikTok or Instagram page, please do. It's Messy and Serene. That's the handle. And so I'm super excited about that. Please go follow that. I would just love your support. So we're going to go ahead and jump into this because you're all here to learn how to make money and how to get trading down, right? So we're going to get into the thing with that. So foundations part 2, right? We're just building directly off of foundations 1. And so in foundations 1, we learned about our candles, right? We talked about red. What are the synonyms that go with red? Drop them in the chat. Red. What's the next one? There were 5, right? So we have red. Drop it in the chat, or you can say it, shorts, bearish. Yep. Price is going down. And what type of setups are we looking for? Shorts. Exactly. Right. So red, bearish, sellers, down, shorts. And then what about our green candles? What are those 5 synonyms? Green. What do we got? Green, bullish. Yep. Longs, up. And our buyers are in control, right? So green, buyers, bullish, prices going up, and we are looking for long setups, right? We talked about higher highs and higher lows, lower highs and lower lows, right? And so we talked about looking at that so that we could create our bias, which is what ultimately ends up helping us figure out what positions we're looking for, right? Are we looking for long setups? Are we looking for short setups? It takes a little time to start getting everything, right? But we're going to get it. And so our buys and our sells, that is our bias. And we do that on our higher time frames, right? Because on our higher time frames, that's where we see our direction. And that's where we're able to identify, are we trending? Are we consolidating? And then we go down to our lower time frames, our 5-minute, 15-minute, 5-minute, to be able to kind of start zooming in, right? And then we execute on our 1-minute. So those are the things we talked about. Sessions, right? We've talked about sessions not acting the same. So we have our Asia session, which tends to be a little bit slower. There's not always as much volume. That kicks in a little bit later in the night, but overall it is much slower than, say, a New York session. And then you have London, right? So we have Asia, London. Volume kicks in a little bit more in London, and then London overlaps with New York, which is why we see a whole lot of volume at New York Open, because we have 2 very, high volume sessions there, right? And so they all, I've said over and over, I encourage all of you to go in and study the way price action moves during the different sessions, because that will help you, right? It's going to help you be able to identify and figure out which session works for me. When I first started trading, I loved Asia simply because it moves slower. So it gave me time to think. It gave me time to process before price was all over the place. New York used to give me actual anxiety. When I first started trading, my only goal was to be out of the market by the time New York opened. That was my only goal, right? And so now it's very different. As you grow in trading, you'll progress and that will change. And so now I don't like trading Asia. It's a little bit too slow for me, right? And now historically, I've not done well in Asia. And so I know that about myself. So I don't even mess with Asia most times. And so you'll learn that. But again, I realized all of that through journaling, right? Because I had to go back and look and say, where did I take most of my losses? And then I realized most of my losses were in Asia. So now I don't touch it. When I go in and trade Asia now, I know I'm playing with fire, right? So if I lose, I kind of knew going into it. I don't have anyone to blame but myself. With Asia, it took me 4 hours to make 1,500. See, yeah, it takes a minute. I was showing one of my mentorship students earlier. I literally made like $1,600 in like 2 minutes this morning. And I was like, this is why I love New York, because I can get in and get out. I do not like to sit on trades all day long or babysit them all day. So I feel that. I like to get in and out and move on with my day. So yeah, Asia moves a lot slower. But that's great. You realize Asia may not be your session, right? And so now you maybe look for. I love London. London is one of my favorite sessions. I just cannot wake up for that session anymore. My body is just like, no, ma'am, we need sleep. So you want to figure out your session and figure out what works for you. And it'll change over time, and that's okay too, right? But the beauty of trading, and especially trading futures, is that no matter what your schedule is, you can find a time to trade it, right? If you work overnights, you have New York or London. If you work during the day, you have Asia into London, right? So there's always an opportunity. Remember, the futures market only closes for 1 hour Sunday through Friday for maintenance. That's it, right? Otherwise, it's open. And so that's a really, really great opportunity. All your friends be in and out under an hour. Yeah, 4 hours is a long time. I'd be in and out in like 2 minutes or less. So, and it's your style. There's no wrong style. I'm a scalper, right? So that's what I look for. I look for scalps, but all of these things that we're talking about here, like understanding the structure, understanding trend versus consolidation, understanding bias, that's what helps me be able to get in and out, because I've already gotten all of that data down. I already know all that information before I even take my first trade. So I know exactly what I'm looking for. I'm positioned to be able to get in and get out and be done. Right. And then we talk about contentment. Okay. I know I'm getting into like the psych part of it, but I want to make sure I cover this today. We talk about contentment, right? I can't tell you how many times that one more trade has ended the day red, blown an account, left me feeling some type of way because I was up, and there is no one to blame but myself. Right. And so contentment is really good, and you have to have a spirit of contentment and just be happy. Take your coins and be done with the day. Right. And so, I'm not going to call anyone, I'm not going to make sure anyone did that in here. She knows who I'm talking about, hopefully so. But we want contentment, right? Grab your coins, don't give it back to the market. We're making life-changing money in such a short period of time. There's nowhere else you can go to and do that. So before we move on, are there any questions about anything I just covered there for the quick recap of Foundations 1? Or drop a 1 in the chat if that all makes sense. Asia is more putting in, yeah, go to sleep, literally wake up. And that is not, I can't go to sleep with an open trade. That would give me so much anxiety. I'm not getting any sleep. Yeah, absolutely. Absolutely, Zikoria. That's why I traded Asia when I first started. I just have to accept that I struggle with patience and FOMO. Yeah, I mean, that's so normal. I struggled with patience too when I first started trading. If I was on a chart, I needed to be in a trade. That was literally how I operated. If I was on a chart, I had to be in a trade. And it wasn't a good trade. I just wanted to be in a trade. Then I would buy and then I would sell and I would buy and I'd sell. And it was just a mess, right? And so we have to figure that out. And FOMO was another thing I really struggled with. I talk about that a lot in Foundations 1, but Man, I would stare at those charts for like 8 hours a day because I didn't want to miss a single move. And now I'm like happy to be done quickly so I can move on and enjoy my day. Um, okay, took 6 trades today, made $1,200. Hey, I don't know why there's an only in front of $1,200. That takes some people 2 weeks to make, friend. Right? That's amazing. That's so good. Yeah, Tito is on it. I'm proud of you for always showing up to these classes. That's so good. And that's it, right? Always learning, always growing, always refining things. Um, Natasha, girl, you sound like me. I kid you not. When I had first started trading futures and getting into them, I would literally load up on I may or may not cut this out of the YouTube video, but I would load up on like 10 accounts. If I blew them, I would literally just go reload. I'd be like, reload, and I'm back in all 10. Like, that is not okay, right? We gonna look, Natasha, Natalie, that's what it is. There's that Nat at the beginning that's getting us. Um, but okay, guys, we're gonna get into this. So I could sit here and just like yap with you guys all day. This is why I love doing these live classes. I have so much fun with you guys. I love this. Okay, so we're gonna have a lot more study halls because I still like having this. All right, so today we're talking about reading the charts, right? From reading charts to understanding it in the market, right? So we talked about what we were seeing in Foundations 1. Today we're going to cover more of how we use it, right? Charts aren't random. Price is moving with a purpose. There's always a reason that price is moving to or moving away from an area and how it responds. And so every strategy, right? There's a ton of different strategies out there. And I will say this all the time. There is not one strategy that is the only way, right? The mentor that I had learned from, again, she's like a multimillionaire off of like pattern trading. That's what she does. She recognizes patterns, right? And she's so good at it. And so, and that is profitable for her, right? If it ain't broke, don't fix it. And so that's done really well. I started with that, right? And then I evolved just because I had more questions. I wanted to understand why certain things failed or why certain things happened or didn't happen. And so, don't knock a strategy, right? Especially if you're on Trading Talk, there's a lot of different strategies out there. Just find one that works for you, okay? But every strategy at the core of it is built on the same foundations, right? That's why I call these foundations, right? Foundations 1, 2, and 3, because everything is built off of that, right? So candles are going to show us pressure, they're going to show us reactions. They're going to show us all of that. Structure is going to show us our direction and our overall trend. And then the context, right? You'll always hear me say, look to your left. What happened to your left? Because everything comes together to tell you a story. And so we have to be able to understand when the chart is just being noisy and it's chopping, right? Because just because you're on a chart doesn't mean that it's an opportunity. And so chop, though, usually means that there's something building. I tell people to think about chop or consolidation as like a spring. The spring is loading. And so the longer price stays in chop, a lot of times the larger the move is going to be when it finally breaks out of chop. And so, when we talk about the mental part of it and the psych part of trading, it's really hard sometimes to sit on your hands and do nothing, right? While you're sitting in shop, because you're like, man, I've been sitting in this shop for like an hour. And I tell people all the time, I talk about it in the Discord, set an alert and walk away. Set an alert, go live your life. When the alert comes on, come back, right? And then look for your trade or look for your setup, because you don't want to get stuck in chop. Chop is what blows accounts. It will literally chop your account up. Okay. And none of us want our accounts chopped up. So the mindset shift is, oh man, this has been chopping for like an hour. Ooh, that move's going to be so good when it finally breaks out. Right. And I had to literally train my brain to be like, okay, the longer this chops, the bigger this move is going to be. And so that's what you have to start looking for and looking at. Okay. But nothing good comes from sideways movement, right? We don't want to take those. So learning when not to take a trade is just as important, if not more important, than learning when to take your trade. Because ultimately, at the end of it, you have to be able to decipher between the two. Okay. Now let's talk about why chop happens, right? Support and resistance. Support is just an area where buyers continue to step in, right? It's literally holding price up, right? If you think about support, support is holding price up over it. Resistance is where sellers step in, right? They're keeping price down. They're trying to pull price down. So resistance is like a ceiling. Okay. And so price is trying to go up, but it can't. So when price moves between the two, that's when you see the chop and the consolidation, right? So it's testing both sides, it's absorbing orders. And a lot of times that's going to happen in a larger range, right? So this is what it looks like. This is our support and this is our resistance, right? And so that's what it looks like when price starts to move and bounce in these areas before it finally breaks out, right? You see these little candles, they're not really doing a whole lot of anything. You might see a quick little movement, but ultimately it's just moving sideways. Okay. These are not opportunities. These are not opportunities to take trades. We don't want to take trades in this. And so that's why one of the things that I really do focus on is AMD and the Wyckoff theory, because understanding that will help you figure out what phase the market is in. Because again, one thing that I always say is I never want the market to take anything by surprise, take me by surprise, right? Because the market moves in phases. Time is fractional in the market. Okay. So AMD is accumulation, manipulation, distribution. I always add an expansion between manipulation and distribution. So accumulation, manipulation, expansion, distribution, because expansion is what happens between the two. We're going to break each phase down today, but it's so important because when you can understand what phase or what cycle the market is actually in, then it'll help you figure out what your next move is, right? Am I sitting on my hands? Am I waiting? Did the move just happen? So I'm not going to FOMO it and jump in now. It's going to help you figure out when to take a trade, right? You're not going to force trades. When you can recognize it, you'll be more patient because you're knowledgeable, right? Because now you understand it. And so I always talk about AMD because literally every single strategy is based off of some part of AMD, right? So it'll be different parts of it, but it is based on some part of AMD, right? Whether people realize it or not. So when we talk about accumulation, one thing, I love analogies. If you've taken one of my classes before, you know I love analogies. And if you've taken enough of these classes, you've probably heard the same analogy over and over that maybe you could tell it. But I always go back to the same ones because that's just how my brain works, right? And I always say it, take these classes, watch these classes so many times that like by the time you come back, you should be so bored because you're like, I already know what she's going to say. I already know this analogy, right? Tina said, I want candy. See, he's been in a bunch of classes. And so we talk about accumulation, right? This is where positions are being built. All right. So this is where we have our chop or our consolidation. This is where price is unclear. It's moving in a range. It's moving between support and resistance, right? This is where a lot of traders are going to get bored. You're going to get tired of sitting there and be like, gosh, I've been sitting here for an hour. I just want to take a trade. So you enter the trade and then you get trapped and your account gets chopped up, right? We don't want that. So remember, accumulation is just preparing for the opportunity. It is not yet the opportunity, okay? So if everybody can take a mental field trip with me, right? We're going to go to the grocery store on our mental field trip. And so if we all go to the grocery store and we're sitting at one end of the store, right? Just at the very end, where all we see are the rows of aisles that go all the way down the store. What's happening during accumulation is there are people, right? Institutional money, whatever you want to call it. There are people in the aisle loading up their cart with all kinds of products. And you have no idea, if we're just standing at the end of the aisle, you have no idea what is being loaded up in that cart. So remember in Foundations 1, we talked about how trading is not gambling, but it absolutely can become gambling. If you're at the end of the aisle just looking down and you can't see what's happening in the aisle as they're loading things in their basket, that's a gamble. You are trying to speculate what's being placed in the cart. You don't know if they're putting buy orders in the cart or sell orders in the cart. They're loading stuff up, but you have no clue what's going in there. Right. And so if you decide to take trades during accumulation, or chop or consolidation, right? Sideways movement, you're literally taking a gamble. You have no clue what's being loaded up there. And so that's why we have to be able to understand, okay, price is moving sideways, price is chopping, we're in an accumulation phase. I'm not taking a trade because I'm not going to gamble. We are not gamblers. We are day traders, right? And so that's what happens during accumulation. They're loading up the cart, they're adding in buy orders, sell orders, but you don't know which one is being added. So you just have to sit on your hands and wait. Okay. So accumulation is that I'm going to sit on my hands and wait to see what price does. Okay. Does that make sense for everybody? Drop a one in the chat if that makes sense. All right. Nobody in here is going to gamble because they understand what accumulation and chop and side. She said 0.5. I love you. Okay. 0.5. Listen, that's good. That's progress, right? 0.5 is better than 0. Accumulation, we're not trading in. If price is moving sideways, we're not trading in it, right? And we'll go through at the end of this and we'll identify all the different phases. But that's our accumulation phase, okay? After accumulation, we move into manipulation. Manipulation sounds exactly the way that it is, right? What you know manipulation to be, that's exactly what it is. It's intended to trick people. Price sweeps a high or a low. Remember when we looked at some of those swing lows or swing highs before? It's going to sweep a high or a low. It's going to look like a false breakout. It's going to take out people who have some stop orders placed there. And this is where, after you've been sitting in chop for an hour and you all of a sudden see a big candle and you're like, oh my gosh, I'm so tired of sitting on my hands. The price just broke out. I'm in, right? This is where people get trapped because manipulation is intended to manipulate you, right? Yeah, I think so. I think it is the same. I don't really follow that strategy specifically, but yes, I think it is the same. So yes, it's intended to trap you, right? Manipulation is intended to do that. The phase exists to literally trigger entries in the wrong direction, right? And so that's why manipulation is there, right? The phase exists to trigger entries in the wrong direction. It wants to remove weak hands. If you're in a trade, right? Let's just say you were already in profit and then price started moving sideways and you were just waiting for it to break out. It wants people to be like, oh my gosh, I'm out. It's going against me, right? And then it runs out the other direction. So manipulation is not the real move, it's the setup. Okay. It creates liquidity. One of the things that you'll hear me talk about all of the time in our Discord is buy side liquidity, sell side liquidity, 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 liquidity. I look at liquidity a whole lot. Okay. That's one of the big things that I trade off of. So go back to our field trip, right? When we go back to our mental field trip, we're at the grocery store. Then everybody was loading up their carts, right? They're putting up buy orders, sell orders in the basket, all that kind of stuff, loading up the cart. Manipulation is they raced out of the cart towards the produce aisle, and you're like, oh my gosh, they're popping out on produce. And then they race straight back down the aisle and they go towards the checkout, right? That's what it did. It faked you out, making you think it was going to go one direction, and then it races back down the opposite side and goes the other way. Okay. That's what manipulation is. It pops out on a side that makes you think, okay, we're finally breaking out. We're finally doing something. And then it runs back the other way. Okay. BOS, I'm going to go through all of that here in a second when we look at the chart. So we will cover all of those things. So yeah, you can understand why that's why, right? You're probably taking immediate entries, right? And it was just manipulation. And so what we want is to see after manipulation, right? Distribution is the next part of it, but I like to put expansion in next because that's what happens between manipulation and distribution, right? So expansion is where the real move shows up. This is like this is where the intention is shown. It's where the result of what happens in AMD, right? So expansion is where price expresses the decision, right? The direction becomes clear, candles grow in size. Momentum increases, right? We start seeing a follow through. The pullbacks are respected. Okay, so this is where price is actually going to move away from that consolidation, and it's going to have some like real purpose and intention. Okay, now what happens after expansion is distribution, right? So we have accumulation here, then we have price markup. That's just expansion to the upside. Okay, a markup is just expansion to the upside. And then it distributes. Distribution is where positions are just unloaded, right? So we've already, once we distribute and we unload our basket, right, where we see price actually go where it wants to go, they unload the basket, right? Whether it's at checkout or back in produce in the back, they're unloading it. We see the follow through, right? The momentum has already expanded in this area. Yeah. So a lot of times this is where you'll start actually seeing that trend. You'll start seeing that higher high, higher low, right? And so when we talk about the higher high, this right here creates a higher high because it's higher than the previous. It comes back and creates a higher low because this low is still higher than the previous low it had, pushes up again, creates another higher high, retraces, creates another higher low, right? Retracement, pullback, synonyms, they're the same thing. So this is a higher high, higher low structure, which is a bullish structure, right? And then same thing on the other side of it, right? A markdown is just expansion to the downside. Price moves down, right? So we create a lower low here, and then we create a higher low because this high is still lower than the previous high, right? So it didn't come all the way back up here, and then it just staircases down. Okay, so markdown is just expansion to the downside, markup is just expansion to the upside. So distribution is where, this is where we get our profit, right? This is where we end up getting paid. Okay. But the process from accumulation to distribution is expansion. So when you make money, you're seeing expansion. Okay. So when we look at that, again, accumulation is where positions are being built. Manipulation is where liquidity is created. For those of you who are in the Discord and see me post levels every morning, I'm looking at levels of liquidity, right? So I'm looking at levels where price manipulated, right? Because I know that a lot of times those areas act like magnets, which I cover more in Foundations 3, but we're looking for areas of liquidity. That's what's created by manipulation. And then distribution is positions where are positions that become unloaded, right? And then expansion is just where the move actually happens. On her markup diagram, yeah, that's the continuation. So AMD explains why the move happens, okay? And expansion is just going to show us the move play out, right? So if we look at that again here, this is where we make money, right? So this is another chart to kind of look at what we were talking about, Sequoia, or the breakage structure, right? So that would be, this was chopping here. This was your breakage structure with your continuation up or down, right? So you get your high quality, high probability trades when you wait. You don't enter on accumulation. You wait for your expansion, right? You wait for it to do that. You have a better risk to reward. There's a lot less chop. Price actually breaks out, okay? Now, accumulation and distribution look very similar. One thing about me, if you guys don't already know this about me, I am not the most technical person out there. I will not claim to be the most technical person out there. There's a lot of stuff that I'm not even going to pretend like I know all the technicalities of, okay? Accumulation and distribution, yes, they are different. They are at different places in the chart, but I treat them and you treat them exactly the same way. They are both ranges, okay? They both are within a range. The only difference is where they appear on the chart, okay? But expansion is very different because you have direction. It's very decisive. It's hard to miss. Yes, I do. I cover fair value gaps more in Foundations 3. Because that's more of an entry model for me. But if you're unsure, right, of what's happening, then there probably isn't expansion happening yet. So if you're unsure of where price is going or what's happening, you're probably not expanding. Okay. Expansion has probably not happened yet. It probably hasn't actually broken out yet. Okay. Because expansion is very clear. We'll look at the chart here in a section. But Accumulation and distribution look the same, right? They're both ranges. They both have chop. They both move sideways. They both are you sit on your hands. Neither one of them are opportunities to trade in. Okay. Not high quality, not high quality setups, right? And we want high quality. So visually, they look the same. The only difference is what's happening. So, and this is just like good for you to know. But again, you're going to treat accumulation and distribution the exact same way. You're going to sit on your hands. They're ranges, it chops, it moves sideways. Okay. But the difference is accumulation is where a lot of times, like institutional money or smart money is buying, and then distribution is where they're selling. So it's just the context, right? So, a lot of people will look at it and be like, okay, it looks exactly the same, which is how I felt when I first started learning AMD. And then the person that like I was kind of watching at the time was like, yeah, they're literally the exact same thing. You treat it the same way, right? Don't like make it more complicated than it needs to be. And so that's literally what it is. They're just on there. Now, the way to tell them apart again is accumulation usually happens after a drop, whereas distribution usually happens after a run up. That's it. If you want to get technical, understand where they are, that's what it is. The question is, who are they trying to trap or fool, right? So again, accumulation, manipulation, you get a move up or a markup, it expands up. Distribution, manipulation, or a move down, it expands down. And so a lot of times you can't really figure out which one it was until the move happens, right? So again, you want to look to your left to figure out where that was. Now, if we look at a chart, and let's actually go to Q here. Okay, so here we go. Okay, so we're looking at this, right? This is pretty clear to see that this was, what was this? Who can type it in the chat? What part of the cycle, what phase was this? Expansion. Yeah, exactly. Expansion, or what do we call expansion to the upside? An uptrend. Yep. We're bullish. Uh-huh. What is it also called? Markup. Exactly. Right. So we have expansion or a markup, right? Those are synonyms. That's basically what's happening there. It's just expansion. It's markup. It's when we move upwards. Okay. So it's expansion to the upside. Earlier today, we had a huge sell off. It was beautiful. It was a beautiful trendy day. So what happened here, right? What was this? It was expansion, but what is it also called? Oh, yeah, I did not miss this one. This was a good one. Yeah, no, I totally get not FOMOing. That's good. Mark down. That's exactly right. So this is a markdown, right? So price moved down here. We expanded to the downside. So see, when price expands, it's very clear that it's expanding, right? It's very clear to see that sellers are in control here. It's very clear to see that buyers have kind of taken some control here, right? And so that's what we're looking for. What we don't want to get caught in is this, right? This whole area right here, it just ranged, right? It didn't really move a whole lot. This was kind of a range. These are not moves that I'm interested in. These are moves I'm interested in, right? These are moves that I'm more interested in. But I don't like sideways. That's just not something. I don't want to sit there forever to make like $500. I want expansive movements, right? And so that's where we see expansion, right? So if we look for other areas of sideways movement, right? Let's go to a higher time frame. I feel like it's easier sometimes. So there was some sideways movement right here also, right? This was all kind of moving sideways. Not a whole lot happening here. Yeah, the higher high, higher low. So if we look at that, right? I mean, on a smaller scale, that could literally be like here. So price moved. This was obviously, this was yesterday. This had to have been, yeah, that was yesterday open. So Price moved up, right? Buyers took a lot of control here. Yeah, absolutely. So, and this is the part of it when you identify consolidation, because you're only going to see the higher high and the higher low, or the lower high, lower low, lower high when you see a trend, right? Otherwise, you're in chopper consolidation. And so when you can identify the chopper consolidation, then it'll be clear to see the higher high, higher low. So yeah, if you're trying to see it here, that's going to be really hard. But here, right, if you actually see a trend, then it becomes a little easier. Price pushed up, created a higher high here. It dropped down and created a higher low, right? Because this low here, this would be manipulation, right? It manipulated down, it trapped people thinking, oh my gosh, it's dropping really fast. We're going down. No, it's just manipulation and headed right back up, right? So price manipulate, because this right here on a higher time frame, this was accumulation. We had 1, 2, 3, 4 candles basically. So what? That's like 45 minutes. I'm not good at math. Remember how I say you don't have to be good at math? um this a whole bunch of candles, just these 15-minute candles just closed right next to each other. Lots of accumulation here, manipulation, and then it took off to the upside. But it created a higher low, moved up, right? Then it came back and created another higher low, moved up, higher high, higher low. So it's much easier to see the trends there. But for how long, how far do you look back? Yeah, so it depends on the time frame that you're looking at, right? So when I look at my higher highs and higher lows, I always start, I talk about this more in Foundations 3, but I do a top-down analysis. So I look at my 4-hour time frame to start figuring out what my bias is for the day. Then I go down my 1 hour. In terms of higher highs and higher lows, like I don't necessarily take trades off of them. I'm just identifying them to create a bias. So I typically just start going down that, like here, even if this had a push up, I'm still bearish because we had such a strong push down. Until I see price take a level up here, I'm going to keep a bearish bias. So does that kind of answer your question? Or I guess more specifically, what's your question? Because I want to answer it. Does anyone have any questions over accumulation, manipulation, distribution? Anything that we just went through and covered there? You can type it in the chat. Or does that make sense to everyone? I don't know how to say your name. I want to say Sasha. Um, but I want to make sure I answer your question. Sachet. Ooh, I like that more. Okay, sachet. Did I say that right? Hopefully. How far do you look back? So yeah, I just use a higher time frame to create a bias there. So I'm not taking trades off of it. I'm just trying to be able to identify whether we're trending upwards or downwards. Any questions on anything we just covered there? I think I'm not marking up my chart properly. Did you take Foundations 1? Yes. Have you done the homework? No. Okay. Try to do the homework in Foundations 1. I'll post it. I think you're in the Discord. I'll post it in the Discord again after this. And try to do that and post it in the chart markup, because I look at all of those and I'll respond. Okay, good. Yeah. Do the homework, post it in the chart markup, and then that way I can look at it and we can kind of go through that together and I can help you figure those out. Yep, I started a 4-hour. Absolutely. You're only looking the 4-hour from the day before. Yeah, I don't look very far back because here's the thing, guys. I'm a scalper. That's my style, right? So for my particular strategy, I don't need to look super far back because like this morning, I traded until like 9:40. I literally like I'm sorry, not 9:40, until 10:40. So I was in the market for like an hour. right? So I'm not looking way back because I just need like a short-term analysis because that's where I'm going to take my trades off of. But yes, I do a 4 hour. I use the 4 hour more on my Sunday markup, which I talk about more in Foundations 3, but I use my 4 hour more on my Sunday markup. And then otherwise I go through my 1 hour. 100%. Tito is so right. Even if you think you're wrong, post it because it will we'll be able to go through it and work through it. And if I'm free, guys, like I'm so serious. I literally just love helping you guys and seeing you guys win. It makes me so happy. So if you post something and I'm free, like I did yesterday, I'll be like, can you hop on a quick Zoom? Like let's like get this, let's get an understanding here. Right. So post it. I'll definitely respond to you. And then you'll learn, right? Because that's how you learn. And don't be ashamed or embarrassed. There's so many people who have posted things and not been right or whatever, right? I'm never going to shame you. I'm always going to like, I always try to validate what you tried to see. Marina, did I answer your question? I hope so. Yeah. Didn't want to post it. Yeah, post it. I always say, like, use your resources, right? I am a resource for you guys. Guys, this is free. The Discord is free. These classes are free. Not a single person in here paid a dime to be in this room. I literally just do this because like the Lord put it on my heart to help people. Like I just want to see other people impacted and change like their lives and their families' lives. That's it. All I ask from you guys is to let me know when you actually make some money. That's all I want. And of course, I do the mentorships, right? That's like one on one, and I'll get specifically into my strategy, right? Because I have people all the time that are like, I want to make what you make. Well, you got to learn my exact strategy, right? That's what I teach in my mentorship. But all of these classes, this is free. Take advantage of the resources. Yes, Brandy, you'll want to post the chart in the questions. I think it says chart questions in Discord. Discord information. Yeah, I'll post that here at the end. Thank you, Zikoria. Okay, good. How long do you leave your markups? So that's a great question, Natasha. So I mark my chart up every Sunday. I do like my higher time frame markups on Sundays. And then throughout the week, all I typically move is like my session high and my session low, my previous session high and session low. And then I'll look at different like areas of liquidity that got created. That's all. That's all I change. And I post that in our Discord to have that. So that part, the part that I renew daily is just new areas of liquidity that got created the next day or in pre-market. And see, like mine has a ton of lines because different time frames have different areas of liquidity, right? And so those are, but on Sundays, I clear the entire chart and I post, and then I redo it. So, but you definitely make sure that like it works for you. You know what I mean? If it feels like too much, then you don't want a lot of noise on there because that will feel complicated. Okay. So no, any other questions? I think somebody in here had asked about fair value gaps. I don't usually cover that in Foundations 2, but I don't have a ton more content. You guys didn't have a ton of questions, so I have a little time. So fair value gap is basically, right? It's a series of 3 candles. It's created by the displacement candle. So your fair value gap, right? Remember when we talk about candy? Okay. So fair value gap is created with a displacement. So remember in Foundations 1, that's what Tito was talking about, the candy, right? In Foundations 1, we talk about how the buyers can't take control the whole time, the sellers can't take control the whole time. The market likes balance, right? And so a lot of times when we see pullbacks or anything like that, the market is simply rebalancing, retracing, right? Because it can't just like dump for days on end, or it can't just like go up for days on end. Okay. So it has to like give some candy to like, because I talk about it like a parent, right? So if you have a parent, if the market is the parent, they can't just give all the candy to the buyers. They have to give the candy to the sellers too, right? And so that's where we rebalance. So fair value gap is simply the point, the lowest point here, right? So this is our displacement candle here. The fair value gap would be created from the bottom of the wick of the first candle to the top of the wick of the third candle, right? And so that would be your fair value gap right there. So it's created by the displacement candle. So when we see fair value gaps, or you see me post that in the Discord, like, oh, we're under, like this morning, we were between two fair value gaps, then that's something that I'm mindful of. I use different time frames. This is on a 15-minute. I use different time frames. So, typically speaking, the higher the time frame, the fair value gap, the stronger that fair value gap is going to hold. And so I mark different ones. A lot of times I'll have because if you mark a 15-minute or a 1 hour, it's going to like encompass a whole lot more, right? So this would be another fair value gap on a 1 hour. And I use them more as like something to be mindful of. They're levels where I know price might react, right? So that's just a general. Foundations 3, I cover a lot more about fair value gaps and how I utilize them. But that's just kind of like a general, because I know someone had asked about that. So I don't mark up 1 minute fair value gaps. The lowest time frame I'll go to mark up a fair value gap is a 5 minute. Any questions on anything else we covered today, though, with accumulation, manipulation, distribution? This is going to be posted on YouTube so that you guys can rewatch it. And then obviously, like using the study halls, right? So let me go back over here. I use a 1 minute for entry. So again, AMD applies to every strategy, right? Okay, you're unclear on where expansion occurs. So expansion would be like if we were here, price was distributing here, right? Or just moving sideways, right? This was some consolidation. And then this is expansion. Expansion is where price, like the movement just becomes very clear. It becomes very clear if buyers or sellers are in control. So this would be expansion here. Right. So this is where it just becomes super clear who's in control. Does that make sense, Nicole? And then if you look, like this was more expansion. Oh, I just moved that line. I don't know where that was supposed to be. This was expansion here to the downside. So manipulation, that's a great question. So manipulation would be like this, right? So price came up, it started kind of like consolidating here. It wicked down. This is manipulation to the downside. At some point, somebody said, okay, price is going to drop because this was a candle down, right? And then they bought it right back up and price came back up. We also had a big manipulation. All of this is every time you see, hold on, like this. Well, what time was this? 9:30. That was market open. Let's see here. These are manipulation is just like this, right? Price wicked all the way up here. So people were probably like, oh, there's going to be a continuation to the upside, right? So price wicks up, but then it ended up continuing down. So that would be your manipulation there. Yes, it does act like a magnet. It doesn't mean it's going to happen right now, but those are some of the levels I mark out, right? So this would be a level that I would mark as an area where price had manipulated and price is likely to return to that level. So when you guys see me mark the levels and post them in Discord, I said this in the last class or study hall or one of them, I encourage you like go back and look at the prices and try to see what I saw. And if you don't understand why I mentioned that price, ask, right? Because I'll tell you, a lot of times I mark prices based on liquidity or order blocks. Basically just areas where price is likely to react, right? Those are the things that I look at. So yes, when price manipulates, it is an area, basically it left open orders, right? So if you've ever worked at a place that completed orders, right? I don't care if it's like Walmart or Target. If people submit orders and they have a bunch of open orders, you have to close those orders out by the end of the day or by the end of the week. At some point, those orders have to get closed out, right? And so, like this is manipulation here. This wick down, this is manipulation. So a bunch of open orders got left here. There's some liquidity left here. So at some point, price is likely to revisit this level, right? So this will be a level. If price doesn't hit it before tomorrow morning, this is going to be a level I mark because there was liquidity left there. So yes, to answer your question, price will revisit it. You have that correct. Nicole, did I answer your question on how it differs from manipulation? Oh, you said got it. Okay, so I think so. Um, okay, perfect. Um, I got EMA. Yep, that's it. Okay, cool. I go through execution more in Foundations 3, which I am going to be posting to YouTube. I recorded yesterday's Foundations 3 class, so that'll be posted to YouTube by the end of this week. Okay, so AMD applies to every strategy, right? So if people trade on breakouts, right? That's why a lot of times they see. So that was what it was. You know, when people literally only trade on breakouts, sometimes that'll fail and it fails because of manipulation, right? And then when it actually goes through with expansion and distribution, they'll see that happen. So lots of different strategies. Again, there is not one strategy that works only, right? There's a ton of different strategies. I genuinely believe they all work. There's a lot of different profitable traders who trade different strategies and they make money. Okay. The big thing is just finding a strategy that works for you. Okay. There's a lot of different ones. Literally, you know, I cover a few of them. There's like breakout trading, these patterns, you can do that, right? Some people I know in our Discord use like an orb strategy. That's super helpful. I encourage you, like, find one. What you don't want to do, supply and demand, that's something that I do utilize. I look for those levels. um yeah, no, definitely don't do that. You don't need to strategy hop, right? So you want to make sure that you pick a strategy and you stick to it. Okay. um because strategy hopping from like week to week is not going to help. But what I do want to say is my strategy may not fit everybody's style, right? So whatever makes it click for you and makes it make sense, that's what I encourage you to use and stick to it, right? Figure out what that is and stick to that strategy. Okay. So I use like a combination of supply and demand, and like smart money concepts is included in that. The first strategy that I had showed was like a breakout pattern, breakouts and pattern trading. There's a lot of people, we have some people in our Discord who trade on that. And again, I'll never knock it, right? You just have to figure out what works for you. So, smart money concepts is really kind of a lot of what I look at because I look at areas of liquidity, you know, the change in character, supply and demand, fair value gaps, order blocks. So, that's a lot of what I utilize in trading. But again, you have to figure out what works for you, right? I trade a lot of just like price action. I like high volume, which is why I like New York Open. And so that's what you want to do. You want to make sure that you have a strategy that works for you and then just see that through, right? Let me answer some questions here. Yes, YouTube link is in Discord. Impressa, if you're able, can you post the YouTube link in here, please? Um, yes, do not strategy hop. This does tie in with what I learned. Okay, good. I'm glad, Sequoia. Yeah, you definitely don't want to change strategies often. Yes, you definitely have to be very clear with chat. I always say utilize chat as like an added thing, right? Like just refine some things, but always fact check it because sometimes I have to be like, no, chat, that's wrong. You know that is not right. And she'll be like, you know what? Thank you for catching that. I'm like, I don't want to catch it. I just want you to be right. Like, that's why I got to talk to Claudette a little bit. You know, every now and then I got to hop over to Claudette. Yeah. So, but yes, you want to be very mindful of that. And, you know, again, just figure out what works for you, right? And stick with that. If you have YouTube links for your chosen strat, upload it. Oh, very cool. That's smart. That's super smart. Okay, so let's talk about risk to reward and stop losses, right? I don't care how good, right? We can talk about strategies and all the different strategies all day long. You can have the best strategy in the world. If you don't have proper risk management, you won't make money, right? And so that's what you have to do. You have to have good risk management. Risk management is just how much you're losing when you're wrong, right? General rule of thumb, you should not be risking any more than 1 to 5% of your account balance or drawdown. If you're in an eval or trading with a prop firm and you have, say, a $50,000 account, you're not risking 1 to 5% of $50,000. You're risking 1 to 5% of your drawdown. So if it's a $2,500 drawdown, that's what you're basing that number off of. If you're paper trading, right, I would encourage you to set up a paper trading account with the equivalent of the drawdown of whichever account you might be looking at, right? If you're live trading, I still encourage you to paper trade. Nobody in here should be live trading unless you have some type of strategy down, you've practiced, you've worked on that, right? So you always want to paper trade before you get into live trading. Thank you for posting that, Tito. You want to get into paper trading before you live trade, right? Whether that be with a prop firm or self-funded. So that's what you're risking, right? So all that's saying is you want to have good risk to reward, right? You should not be risking $50 to make $60, right? That's not what we're looking for. If you're making $50, you should be risking no more than like 20, right? 20-ish dollars, 10, right, is better. And so you just want to make sure that you have good risk to reward ratios. Otherwise, it's just going to be tough. You're just going to be fighting yourself all the way through. So you want to make sure that you have that. If you don't understand what your risk to reward should be, ask questions, right? That's what the Discord is there for. Every trade should have a stop loss every single time. One of the first things I do when I enter a trade, I like to manually manage my trade so I don't have like the ATM settings. But every single time I enter a trade, the first thing I do is set a stop loss. Am I going to leave it there? Maybe, maybe not. I might move it closer. I may not want to risk that much, but I immediately set a stop loss because one sweep can blow your entire account. And I've definitely had that happen. Uh, she said, I let my girl run free. Natasha, I used to do that too. Several dozen accounts later, I started setting stop losses. Uh, that is so funny. I, I feel like you're like the same person I was when I started trading, which, if it ends up the same way, that's gonna be really good for you. like, um, but I set a stop loss, right? One of the things that my mentor used to tell me, I don't know if I already said this here, but I literally used to hold on to these like losing trades for like, gosh, I'd be so red. And she'd be like, girl, you holding that till Jesus comes back or what? Like, let the trade go. We are red. And so you just have to be okay with being wrong, right? So you want to make sure you have that stop loss because I would rather lose like $100 than be red $1,000 and have to make that back. And the stops just protect your capital. If you take loss after loss, that's going to hurt your confidence, and you don't want that because trading is such a psych thing. And then it's just going to improve your discipline over time. So, my friend, try to set some stop losses. Set a wide stop loss. You know what I'm saying? But just set a stop loss. um, Oh yeah, it's okay. You know what, Natasha, my husband and I always say this, like when we were first starting out and all that kind of stuff, really trying to get our strategies down and our disciplines, honestly. Um, we would be like, I blew an account. He'd be like, yeah, I blew an account too. I'd be like, we gonna learn when it hurts enough. When we get tired of resetting that account, we'll learn. We'll stop. Can we set up a standard? Yeah, you can. Well, I don't know. I talk about that in Foundations 3, the fib. I talk about the fib retracement in that too. That'll be posted. Um, but yes, you should be able to set like an ATM setting where it like automatically sets a stop loss and automatically sets a TP. I don't do that because I scout. I'm in and out of trades a lot of times in a minute or less. So I go in, I set my stop loss to make sure I don't lose more than I want. but a lot of times I trail straight into profit. Do you set a different stop loss for each account? Yes. Well, like if you're copy trading, then you won't have like a separate stop loss. But I, depending on like the trades I take, then yeah, I set different stop losses, or the size of the account matters. Sometimes I'll set a different size stop loss because of the size of the account. Yes, because of the trade tank. Yeah, exactly. We do not want to lose a lot of money. When I set an account loss and she comes, Natasha. That is so funny. If I'm gonna show my husband these, he's gonna be like, "She is lit. Is she you?" Um, yeah. I'd be like, "It's gonna come back." It's tuition, guys. When you blow accounts, it's tuition. Because here's the thing: you only lose if you quit. That's the truth. That's the real truth. People who say, "Oh, I lost all this money," they gave up before they had their breakthrough, right? I mean, that's it. So you only lose if you quit. No, don't go blowing like 30, 40, $50,000. You know what I'm saying? But like have boundaries. You need to have rules, you need to have disciplines, but as long as you're improving and growing from one blown account to the next, then you're progressing, right? And it's tuition. I mean, we've made back tenfolds what we blew in blown accounts. So as long as you keep moving forward, you will get it. You absolutely got this. I say that all the time. The money is already yours. Like it has your name on it. It has been claimed. Like in Jesus' name, it is all yours already. You just have to see it through now. Like now you just have to walk it out and see it through, but it's yours. So you just have to keep going. You can't give up. You can't be discouraged, right? But you are going to have days. Trading is an emotional roller coaster. I would be lying to you. It would be a bold faced lie if I sat here and said I never had days that I wanted to quit. I did. I had so many days early on, especially. I would go to my husband and I'd be like, I don't think I can do this. Like, I'm done. I don't want to see another chart, right? Like, yes, Natasha, in Jesus' name. But there were so many days, right? Yeah, you take a break. Sometimes you have to take a break. I don't care if it's a year, 2 years, or 3 years. It could be 5 years. Come back. You won't lose. You know what I'm saying? Like, that's the biggest thing. You will not lose as long as you come back to it. Because once you get it and you lock it in, like I said, nobody can take that from you. She said it's a break. Sometimes you need that. You know what I mean? Sometimes you need that mental reset. And so I'm proud of you for coming back. Like after, yeah, if you took the break, you needed that time for yourself. I'm proud of you for coming back because that's it. As long as you come back, you're going to make the money. You will make it back tenfolds. Um, but yeah, there were so many times I went to my husband and I said, I don't want to hear about a chart. Don't talk to me about no charts. Don't talk to me about no trading. I don't want to hear about any of it. I'm done right now. You know how I said right now? Like, I always knew I would come back. And I did, right? I just needed to go lick my wounds a little bit and then come back. Um, my profitability, so I always say this because I have to give this disclaimer. I was very, very ill for like a year and a half, almost 2 years, really. And I was bedridden, like I was straight bedridden for like 6 months. So I had a lot of time on my hands, like a lot of time. And so I deal with some like chronic illness, autoimmune things. And so I, go through these flare up periods. So when I had first started trying to really learn, I was in the midst of a very bad flare up. And so it probably took me like 7-ish months at most, maybe 6 to become profitable. Um, but again, I was spending a lot of time in front of the computer. Yeah, it's all good. Zakoria, life happens. You just got to give yourself the breaks. Give yourself grace. That's why I talk about that so much in Foundations 1. You got to give yourself grace. It's worth it. Where else can you go and make $20,000 in a week or $30,000 in a week? Because you guys will make that type of money. You're not, and not because you're making 10K on a trade, but because you learn how to build a trading ecosystem, right? Um, that's one of the big things. You have to figure out how to build that for yourself. So, you and risk management is such a big thing. Yeah, I know. Same. I tell people that all the time too. I'd be real hard on myself. Okay, so we have to have good risk management, right? And you have to have trading rules. Your rules are not going to look like my rules. Your rules are going to be specific to you because your rules are going to be designed for your tendencies, right? Remember, my husband, we don't call them weaknesses, they're called tendencies, right? So your rules are going to be based on your tendencies and it's going to be specific to your personality, right? And they exist to protect your account. Some of the main things that I always say is take one trade at a time. You should not be taking a trade in gold and in NQ and in ES all at the same time, right? That is entirely too hard to manage. And so you want to do one trade at a time, trade one symbol at a time. Don't over leverage. If you're trading with a prop firm and they let you trade 10 minis, that does not mean that you should trade 10 minis, right? You want to make sure you're again using proper risk management and you're not over leveraging your account. Over trading is another thing, right? That's why I say all the time in the Discord, do not give your money back. Do not let the market take that money back from you. If you're green, go be green. Enjoy your day. Celebrate the fact that you made $1,000 or $500 in a matter of a few minutes because where else can you do that? Okay, so over trading, don't do that. And you might have to set some real like boundaries for yourself. I talk about it in Foundations One. I literally had to like block myself from the site for a period of time. There was also a period of time literally used to give my computer to my husband and be like, do not give this back to me until tomorrow. Um, so those were my safeguards, right? Because that was a really big tendency for me was over trading. I always wanted more, right? And what that really led to, the root of that was I was a little greedy, right? I just wanted more. So I had to figure out and work on my spirit of like contentment and being happy with it. And then chasing losses and revenge trading that will get you every time, right? We don't chase losses. So breaking rules will cost you money. It never costs you money to not take a trade. You won't go red not taking a trade, right? Better to sit on your hands and wait for your opportunity than to overtrade and go red. Oh my gosh, Natasha. Oh, you are literally, I feel like you are literally like a carbon copy of me. Um, I used to like get in demo accounts and trade like 150 mini contracts just because. But I did it in demos. Like, that's so wild. That's so funny. Well, at least you own it. I'm proud of you for owning it. Yeah, dreams about trading. That's so funny. She says I wake up sweating. Girl, trading 150 contracts, I'd wake up sweating too. 144 accounts. I don't know if that's a dream or a nightmare. I guess it depends on if you're red or green. Um, so we want to talk about managing trades, right? One trade at a time, let price move in. This is how I do it, right? I manage my he said, "Are you okay?" Yeah, you guys are funny. Um, I do one trade at a time. Once my trade moves into profit, this is just my personal strat. It doesn't mean that it works for everybody. I get deeper into this in Foundations 3. But you let price move into profit. And then for me, I move my stop to break even once I'm a good bit in profit, and then I trail as needed. So micros are super helpful when you're first starting out, especially. It gives you a lot more grace. You can scale in and scale out much easier, and it'll just honestly help you emotionally. Because it's a lot easier to see a red $50 than $500. It's just the truth. Uh, so ultimately, you're looking for control, right? You want to have controlled trades over just like chasing dopamine and excitement, right? You will be far more profitable fast. Well, you'll be profitable faster and far more profitable if you consistently make $200 a day, $300 a day, 500, whatever the number is, versus having like home run hero trades and then never making money again that week. Right. And so there are people who consistently make thousands of dollars a day. Cool. That's awesome. Like, love that. They're consistent. You just have to be consistent in doing that. That's so funny. She said that was more stressful. Yeah, I could definitely see how that would be more stressful. Right. So you're good. Right. You're already set up for some of the stress. Discipline over dopamine at the end of the day, right? You have to have rules, you have to have disciplines, and that's going to help you not just chase trades. And here's the other thing. A lot of times you'll take more trades because you're bored. We need to just find hobbies, is the truth. Go find a hobby, go find something else to do. That could be anything. Paper trade it. Uh, just do, yes. I was hoping you heard that, friend. Yes. Yeah, can't sleep. That was a big struggle of mine. So I got really big into reading. I read a lot. I'm always working on like a new project. Um, I did some like, oh, I love reading. Yeah, so actually it's funny. I we talked about starting like a little book club in our Discord. We are going to do it. We're going to do it in March. I'll make a chat in there at some point. But yes, we need hobbies, right? So find something. You know what I mean? Go take a walk, go touch grass, but find a hobby. Reading and writing. Yeah. Playing games. Absolutely. Oh, I love that. Yeah. So yeah, do something, right? You have to find something to entertain yourself so that you're not totally like glued to your screens, right? Because we talk about it. I say this all the time. You're here to become a day trader, not an all day trader. It is like mentally not good for your well being to stare at a chart for 8 hours a day. It's just not. And guys, remember, a lot of you, your goal was to become financially free, financially independent, replace income. We don't want to replace income to just be like trapped and chained to a chart all day. That is not freedom, right? Freedom is logging in, making your coins, and going and enjoying the rest of your day. That's freedom, right? So that's what we want. What is the homework under? The Foundations 1 homework, I will repost it in the Discord, but here's for Foundations 2. Just review, retake classes as needed. I do encourage everybody. Yes, let me post that. I do encourage everybody to, I'm going to stop. Hold on. I do encourage everybody to retake the classes. I encourage everybody to create a demo account on Tradeovate. If you haven't already, you should have TradingView set up. We talked about that in Foundations 1. But create a demo account on Tradeovate and just start getting familiar with it, right? Because you don't want it to be your first like experience when you go into the prop firm account. You want to already be familiar with the platform, and then start figuring out what strategy makes sense for you, and then really hone in on that and really just work on that. And remember, this isn't about being perfect. You just want greater understanding every single time, and just don't give up. Just keep going even on the hard days. And that's why we have the Discord, right? Because trading can be really lonely, and so you want a community of people who are going to celebrate you, who are going to lift you up. And my prayer is just that our community does life together, right? Because I just want it to be a really positive place. So make sure you study, review all of your stuff. Thank you for posting that, Impressa. Subscribe to the YouTube channel. I am going to be posting, like I said, Foundations 2, Foundations 3 will go up as well. And then throughout the week, moving forward, I'll be posting at least one like trading recap video. So make sure you're subscribed, and that way you can kind of just learn more about my style, what I look for when I take trades and things like that.